morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 1st of May 2012. Okay, let's have a look at Euro on the daily, see what's been happening. Yesterday a bit of a pullback. Price is trading in an area where we're seeing a bit of consolidation taking place. However, the good thing to notice is that we're still getting higher swings. Price is still edging its way to the upside, and in doing so it's forming these higher swings, which is great. Past couple of days going sideways, testing a prior high. Past 2 days, yesterday we saw a nice little resistance at this level at roughly, what figure was that? That was the 13246 area, and we saw a bit of a pullback. However, that pullback only pulled back to the 50 period moving average here. You can quite clearly see in purple. 20 period moving average still below price, and in doing so still supporting it. CTC on this time frame daily is still looking positive, with our blue arrow, blue candles, and the CT histogram on either side still blue. And this morning on the Asian market sessions was trading slightly down. However, going into this open this morning, we are seeing price moving higher. One thing to note is that we have a lot of bank holidays today, this Tuesday. We've got Swiss, we've got the French, the Germans and the Italians, and the Chinese, all on bank holiday. So liquidity not really going to be there on the European session. We'll see what happens going into the US session. But we could see, if there's anything, just slight movements sideways in this consolidation band around here. Just going to pull back so you guys can see the overall trend of this. You can see price has been pretty much moving in a consolidative range since late Jan, and you can quite clearly see here these two bandwidths over here where price is testing at the moment has been quite an area of relative resistance in the past, so we could see hesitation. So consolidation could be the talk of the day on this particular pair. Moving on to sterling, let's have a look and see what's been happening. This one over here has just been taking off. Past couple of weeks, price has really been rallying, broke through the 1600 with very strong support resistance level at 1600, and since then it's just been moving to the upside. Consolidating every now and again, but momentum has just been with it. Friday, very bullish. However, seeing Monday yesterday, a bit of a hesitation, almost like a shooting star. A little bearish consolidation at this area here at roughly the 16,2800 mark. The reason for this is potentially probably this breakout, this initial move over here in the pullback, and then we've obviously gone 100% of this first initial move here. So let's have a look. So this is the first move. Then we had this pullback, yeah, and then we had a run. So yes, 100% extension of the initial move over here, and you can see that price has now found resistance at 100, or people have taken this as a nice area to take profit, and we've seen the pullback forming at this level. So how far is this pullback likely to be? Well, we can take the lows over here, for example, take our fib retracement areas, and look at these lows here where the start of this upside trend went to the high of yesterday's candle, and you can see that 23.6 here, just roughly around the 1620, could be a nice potential target to start with for today, for the end of this week. 23.6, nice little hesitation area, good find support here before we see another reattempt at these highs. As it stands, still trading above 1600, should still remain bullish long term, and you can see the CTC is very much an upside in favor of that. All the moving averages are below price, and most importantly our CTC is still positive across the board. So we could see potentially 23.6 being our first target on this pullback. A break below 23.6 here at 1620 or 1900. We'll ultimately look at 38.2 here at 1200 as our next target below that. So could see potential price pulling back to roughly around the 16,200 mark. What's happening with the Swissy? Swissy yesterday, slight consolidation during the first part of the session, and then we saw by the end of US session play, price pulling all the way back down to the low side. CTC on this pair is still trading negative. We have red across the board, and most importantly, we have our 20 and 50 above price. The institution moving average still below price, and you can see that momentum is still favoring downside movement, and it looks like attempts at 900 is still possibly on for this pair. Look quite closely, price looks like it could be potentially going back towards 900, which we had price support and resistance here in the past in late March and early May, April, apologies. So 1900 is still on, but if you're looking for if you're looking for a trade to get into, then obviously we need to see a break of these previous lows here, roughly around the 905 mark. So patience would be key. In this pair, you can see lower swings, price really being pushed to the downside. If you look at the overall trend for this pair on our daily time frame, you'll notice that if we come from a high and it's swinging lower, and doing so, price is edging lower. Swing low, major resistance here at the 920, 200 mark. There we go, which set up this negativity to the downside. Resistance, a lot of resistance here for a full week. Indecision candle shooting stars here, dojis, and then we've got the bearish engulfing, and then prices reverted to the downside. As it stands now, potentially 900 could be our first target as we head lower, as the CTC tells us that momentum is still favoring downside. Last pair of the day is US dollar Japanese yen, and this pair has just lost all its upside drive. Loads of momentum to start with through February and March, massive climb to the upside, and since then we've seen pullbacks. Two particular areas. 80 being a very strong support and resistance level in the past, and price just smashed straight through it yesterday. And if anything, we wanted to see a nice bounce off that 80 mark, because previously it was a very strong support and resistance level. You can see quite clearly going back here towards May and June of last year, and even further back. However, in this case, after this breakout, we were expecting that to happen, a nice bounce, consolidation, even a push higher. That has not materialized. Now these lower swings are swung lower, and in doing so, swing low, they've been capped, and price is been heading lower. Looking at Thursday and Friday's down candle here, bearish, really moving to the downside, and then yesterday, pretty much going straight through it. Tentative, but now you can see that price pulled back on the Asian session to the underside. Now what we want to see is the 80 now forming a nice resistance, and then we should see a continuation lower towards the 7900 mark. And then ultimately down to the institution again. So things are not looking all that good for the US dollar Japanese yen as I speak. We'd like to have seen price actually consolidating above the 80. That has failed to materialize, and as long as price is trading below the underside of 80, this is now going to be a resistance level. Previously it was support, and the longer it takes for price to fail to break higher than 80, the more likely is we're going to find resistance at this area, and then we should see further downside momentum occurring. CTC on this time frame, we saw a red candle all the way way back up here, and then we saw some candles, but however the CTC still remained blue on the other side, primarily because we're still trading with the 80. Now for the first time, definitely showing the bearish momentum, we're trading below the 80. CTC is in our favor, so looking for a trade to the downside. Let's see what happens if this candle can remain below 80, which will confirm that price is still looking negative, and then we should be looking towards the 79.10 mark as our first target, which happens to be the 61.8% pullback of this initial upside trend. Break below that, then we should be looking back down towards the institution, which is roughly around the 78, which happened to be another very strong support and resistance level in the past. Break below that, well then we're back into this consolidative range here between 78 and 75.50, which has seen this pair been trading in for a number of months. Okay, there's that consolidative range between 78 and 76. So lots to see on this pair. Look for consolidation. See for bearish candle below this 80 to confirm that we should be looking for further downside. That's it, guys. Hope you have a fantastic trading day. There's a lot of bank holidays across Europe. Most of Europe is closed today for bank holidays, so liquidity at the moment won't be there. Let's have and see if we can find something. Let's see some movement on the US session later this afternoon. Other than that, just make sure that you follow the rules of this particular trading strategy and back it up with sound money management. And then I'll see you first thing tomorrow morning. Until then, trade serenely.